What's up, guys? And welcome back to my channel. One of the things that is in the back of my mind is the China real estate market. Now, when it comes to China, you don't get a lot of information on it. There is limited access in terms of news. Reporters of the foreign nations are previously driven out of China. So, a lot of data points can be very inaccurate. But nevertheless, China previously had a real estate crash. A lot of developers went bankrupt. A lot of public companies went bankrupt. So it's basically the 2008 equivalent of China. So basically, it has the potential to drag down the rest of the world. So that is really the main concern. So that's why it is important to look at the China real estate market, even though it seems a very remote issue when you are thinking of a US and a Canadian investor. So let me just give you a little bit of a backstory before we go through this article on how they revived the 2.4 trillion property market, which is an article from Bloomberg. When it comes to China policy, it can be quite extreme and it can change quite quickly. But when you're investing in a China market, the government's policy is actually the number one driver. So instead of looking at the fundamentals, technicals, or whatever, government policy is key. Previously, I lost money on Alibaba because I was against the government policy. And it's a very painful lesson, but I learned nevertheless. Let's recap what the government policy for the China property market is. First, they were building a lot of houses. It's mainly through pre-sale or even just regularly sale, but it is being sold out. Now, one of the issues is that the China home ownership rate is actually really high because obviously Chinese people believe that they should own their own home. So I think last time I checked the statistics is around 60 to 70%. Now, if they build new homes and it's being sold out, the developers will continue to build those homes. But there's no one to rent, so they're hoping for capital gain. So what you get is a surplus of houses that are empty. So this is before the crash. So at that point, some government officials realized that, hey, this is an issue. So what we're going to do is we're going to limit the number of second mortgages that people can get out of their primary residence. So what that means is if you already own a home, when you buy your second home, it needs to be all cash. You can imagine, hey, that is actually really difficult to buy your second home, right? And in China, there's also a very strong concept of the provincial rights. So if you are born in Shanghai, then of course you can buy a place in Shanghai. But if you're born in another location like Shenzhen, you actually cannot go to Shanghai to buy a place unless you have like a work permit there or anything like that. So that is another factor as well. But when you make it harder for people to get mortgages, when you stop people from having one house buying a second house in China, then suddenly you dry up the demand for houses. And now the developers are forced to sell to first-time homebuyer. And that is an issue, because there are only so many home buyers and home ownership rate is already 60-70%. That, in my opinion, is one of the drivers that led to the collapse. Now, of course, there's also COVID and supply chain and all the other issues. And I think those are the key policies that led to the crash. So now China is trying to reverse this. So that's what this article is about. So let's go through it together. First, we can go down, and it is a timeline, created by Bloomberg, so it's relatively easier to read, and it's kind of in the reverse order. So May 24th, quite recent, they talk with the major 24 financial institutions to accelerate the delivery of approved loans. So that means if you want to get a mortgage, it is easier now. So that is the final thing they did. Previously, they cut the interest rate. So this is actually the opposite of what US is doing. So US is trying to kind of reduce the amount of liquidity in the system so it doesn't get overheated. While in China, they're trying to lower the interest rate, trying to get you to get that mortgage to revive the property market. And before that, they're making it easier for families with more children to own multiple properties. So in a sense, they are reversing their existing policy of, hey, people cannot buy a second home, but now they're saying that, hey, if you have more children, you can own multiple properties, which is also one of the key policies of China, is to reverse the first child policy, because they realized that if you have a demographic with a smaller and smaller younger generation, it kind of looks like a coffin, whereas the boomer is in the middle, then you will get a labor shortage. In China, the immigration policy is really strict, so it's not like US or Canada where they rely on immigrants to come in to fill in that gap. They want the Chinese people to have more children. They are also implementing another interest rate policy for first-time homebuyers. So you can see that they're basically changing their tone. They're shifting from, hey, we cannot have all these people having these properties, to, I think you guys should continue to consume and get that mortgage and keep the property prices up. Because if you follow the first model, which is what they originally do, then that will actually lead to a real estate market crash. Now, these policies, I think, should be effective, but it actually doesn't solve the underlying problem that the home ownership rate is really high. And they need to have an inflow of people to rent these places, to live there, immigrants, if that is possible, to fill up these, ghost towns. And yes, it is possible to argue that, hey, they're building the city before the economy gets there, so then the people will kind of live there once the economy booms. But then you're also having all these unfinished construction building that is technically not good for the economy as well. For now, I'm actually happy that they did this because I think it will ease the real estate market crash in China. And by cutting the rates overall, it actually boosts their economy as well. So in terms of a monetary policy, I think China is already doing a good job. So the key issue now is really the COVID situation. Within China, they're still under lockdown. In fact, the two most important areas, Beijing and Shanghai, are under hard lockdown. And that is going to be one of the major barriers for economic growth. So we'll see what happens, but basically, this is where we're at the moment. If you're interested in learning more about investing, then you can go to the first link in the description to sign up for the free training for Investing Accelerator. So when you're thinking about macroeconomics, this is actually a topic we dive quite deep into during the weekly group coaching call for Investing Accelerator. Because over the years, I realized that you do technical analysis, you do fundamental analysis when it comes to investing, but sometimes there are these additional factors that can influence the company's stock price and drive it down. So Alibaba is a fantastic example. It is a great company, great fundamentals, great business model, but because of the political environment and the China environment is so difficult, ultimately it has gone down significantly in value. So one of my losses in the recent years is actually Alibaba, and that's why I changed my strategy to include something called hedging. So in the event where I think a stock will go down further because of some unforeseen event, then hedging will be put in place to reduce the loss. So that is one of the techniques you want to learn if you're trying to reduce the amount of risk when you're investing in the market and you think there are some short-term negative events, like, for example, the tech market crash this year or the China real estate market crash, so on and so forth. So yeah, if you're interested in learning more, then it's the first link in the description.